So can I just say straight up, it's a real pleasure to be here, a real honour. I know lots of people in the audience through the last 12 months of Discovery. My business is all about digital delivery. So the word disruption comes up quite a lot. So let's start with an example of what disruption is. So it's very disruptive for someone who knows nothing about the fund industry to come across to Berlin, pretend to know about the fund industry in a ruse to get a Steve McManaman signed Liverpool football cap. So that's my little definition of disruption right there. What I've put together today is an outsider's view of the market looking in, largely on the basis that we've done some digital kind of insight into the fund market, and it's a difficult space to define. Lots of the consumer trends, lots of even the business trends don't apply, and there's this inherent belief that my 3-page website with no functionality is kind of all right, because no one looks at it anyway. So a story of disruption. Who is your disruptor is the key question to ask in your businesses. I've worked at Skype, but if you look at things like Netflix, I've got a statistic here that says that Netflix has 92% penetration to the US market. Time Warner AOL had a corporate collapse of 13 billion of value, while these guys were nimble, agile, created the right content, the right model, and took the market by storm. If you look at Airbnb, this new phenomenon of going to stay at a friend's house but paying for the privilege. It used to be nice to go to somebody in Germany and say, I'm your friend, any chance of a spare room? But now you'll spend money. They've disrupted the market to the tune of an approximate 110 billion of value out of the hotel chains and the B&B chains across the world. It's a massive amount of disruption. And they're picking up a $2 billion revenue stream per annum. At Skype, we estimated that we took out about 1.2 trillion of the global market, and our carrier services director who did all that is in the second row and will ask me great questions to make me look good later. But taking that 1 trillion opportunity out of the market gave us a revenue stream of just shy of $1 billion. So it gives you some examples of how the right first mover advantage brings the right outcome for your brand, but you literally have competition falling apart in front of you. So it's a really big cultural change for teams and for leaders who are trying to achieve big things globally. If I look at the stylization of this market, the fund market, it's a very friendly environment. There's not a lot of smiling in the audiences when you present, but that's okay. But everyone knows everyone. Put your hand up if you know Bob Knipe. Put your hand up. Put your hand up if you know Mr. Olivier EY there. Less popular, but predictable. And you know I love you dearly. And anyone know Lee Godfrey? There you go. Everyone knows everyone. If you did that in a telco conference, nobody would know anyone apart from Laurie Pal, because he's the guy that bought 41% of the world's minutes. So other disruptors, I've put Knipe in there for one reason, that Bob, 12 months ago, asked me with Lee to think about how the fund space might be the beneficiary of digital applications and digital solutions. So we're on a journey to find out whether fund is disruptable. Should it be? Why would you do it? And how do you get there as one of the players and actors in the market to really see an advantage? And I'll just leave you with the thought that on this page, the CEO of Spotify said music is data, as he took out every pound of the music market. So music is data, and that's disruptive in its own right, because it's a very creative format in our lives. They see it as a commodity. So, a couple of examples from my history. In itself, this is a disruptive career path. I mean, there's no pattern to this. Right? If somebody asks me to do something, I'll just say yes. It's all right, I'll give it a go. I started life off at HBOS as a graduate trainee, running telemarketing for credit cards and mortgages and loans. And within that banking infrastructure, we had an alignment between Halifax and Bank of Scotland. And it was a really great journey for me as a young guy to learn about those processes. I go to Adidas, and Adidas disrupted the world by making the £70 football boot a £120 football boot called the Predator. And they were able to do that by putting blades on the bottom of people's soles that didn't work and cut your legs to ribbons and charge you an extra 50 quid for the privilege. As well as that, my job within Adidas was about supply chain planning and delivery. So our job was really to think about how will Adidas in the UK maintain the standards of the brand of Germany, but also think about a different style of market. So the UK, you won't be surprised to hear, is the fulcrum for the global Adidas secondary market in wholesale. And we wrote a business that was at 50 million revenue, very small turnover compared to other subsidiaries, and we grew it to 550 million and bought Reebok. At Virgin Media, does anyone from the UK remember NTL or Telewest? Do you remember getting the right volume when you pressed the volume button? I got channel 4 when I did it. So we had a really cumbersome local cable kind of community of 12 to 15 franchises. I was appointed by the bondholders, the Huff brothers in New York and Fidelity Finance, as the ops guy, based on what I'd achieved at Adidas and Bank of Scotland. And we did a turnaround for 3.5 years. One example was we were paying a company called Experian Print and Mail about $1.5 billion a year to print paper for our customers. And if we missed by one sheet of paper, we paid a penalty of another $1 billion. Hence, the thing went bust. So the principle of Virgin Media was get the right brand, fix the infrastructure, and really realize value for customers. So we fixed the product. The volume button worked for the first time in a decade. We made telephone calls free. BT were trying to charge £180 a month for a line rental. The disruption was, we'll give you that free. Just buy your TV, buy your broadband. We'll make sure it works. And guess what? Virgin bring along a mobile product, and you've got quadruple play in the UK. Extremely disruptive play. First Prepay was a startup I ran. We didn't even get to a logo. We were on a business park in Chester, and we were doing affinity cards for prepaid. So you'd load your prepaid card, and we had little cool brands like Ministry of Sound and lastminute.com chucking these things in with their terms and conditions and CDs. So we did a global kind of think about the brand and about the customer, and it wasn't consumer, it was B2B. So typically BT sold network services globally on multi-million-dollar contracts and didn't support them. Sales guys, 5 years of revenue uploaded, commission sought, 5 years of cost ignored, pension with $1 billion hole in it, P&L with another $1 billion hole in it. Why don't you give me a call? I know all about this because I used to sell prepaid debit cards. So BT ends up being a kind of a 5-year turnaround. We helped really rewrite the product, which was the key thing again, get to the product early. We wrote a new broadband solution for businesses and techs. We gave away infrastructure to the market to make sure they could play. And on the back of providing those endpoints or nodes, or whatever else you want to describe them as, we built our business up again, right across the globe, not just in the UK. So we ended up with a profitable kind of ledger after 3 years of renegotiation with over 150 partners. And we rewrote the future of BT on the basis that content would be king. And now, BT is one of the major providers of content in the UK on sport, film, and all the rest of it. So the cycle between those 4 companies just continues to roll. It's been fascinating to be a part of it, but the principles of disruption are very straightforward. You learn from the past, you use the data that you've got in front of you, and you ask the questions you need to ask about 5 and 10 years' time. If you can future-proof a business, you've got a real opportunity to choose the right partnerships, choose the right geographies, the right network, and so on. When you get round to the right-hand side, I won't bore you too much, but the key thing is that Knipe and the Royal Mint are 2 of my clients. One's more important than the other, of course. Thanks, Bob. And I think it's very important that you understand the Royal Mint use case. So right now we are launching in July, and this is public domain information. Royal Mint's partnered with CME. NWA runs the program for delivery, and we're launching Royal Mint Gold in July. And Royal Mint Gold is a global play that will take about 10 years to establish itself. That is an alternative structure to ETF markets and commodity markets, and it's a global currency potential. It's not Bitcoin 2. At least that's what my notes say. But the principle of it is that they're leveraging technology like blockchain at a very early stage in a very credible and investable way. This is not free. This is not near free. But this is about CME, a 100-odd-year-old company with a 1,000-year-old company like the Royal Mint. Royal Mint disrupted for the last 1,000 years by providing coinage to the world. So think about a time where you might have a cow and I've got a chicken and we want to kind of barter. Surely a cow's worth 3 chickens. That's where coinage comes from, and minting. Right now, they realize that coins will be out of circulation in most of their dominant markets within the next 5-year period. So they're being disrupted by the reality of our cards and our online trading and so on. The relevance to Knipe and to the fund market is that they want to sell Royal Mint Gold as an alternative to ETFs. Therefore, they're going to target fund managers all over the world with their new product. And if I think about Knipe as a platform and as a digital provider of services in the future, there could be other revenue streams that are applicable, some that aren't, but fundamentally there's a disruption potential there we need to be aware of. And with my company seeing the blockchain evolution and deploying it in a live world, we can get insights from that I'm more than happy to share with market, especially Knipe. And I think the other part of this is that, Bob stood up about 12 months ago. For what it's worth, Bob enabled me to talk about Skype 8 years ago after our turnaround, and I'll come on to that case study in a minute. And he gave me the platform at Alphi to talk about Skype, and we were short of investors, and we attracted in a lot of investors and kind of credible people who championed our brand. In return for that, I came back to Bob and said, I think you've just got to do something about this market of yours. Everyone's friendly, everyone goes to each other's barbecue, everyone's dancing together, but I don't see anybody kind of taking the edge and trying to disrupt. So this is where I think we're on a journey, but it's a humble thing, disruption. If you start with the idea that I've done it before and I'll do it again, you'll fail. And if you carry on with the thought that it has to happen, you'll fail. And if you carry on with the thought that technology is everything in the equation of disruption, you'll fail. So with that in mind, if the clicker works, there you go. It's a digital clicker. So I was asked to talk about Skype, and I love talking about Skype. Why? Because it was the culmination of my whole career in bringing together a global brand and a global solution that customers really loved. And that's what it's all about. So just to remind people, we went through several stages of kind of ownership. eBay bought it. It was worth 2.6 billion. They were supposed to enhance the auction process with a Skype solution. It didn't really take off. Silver Lake, who employed me, bought the asset, put it back into private ownership, and thought about how do we get from 41 million users, of whom 40 million get spam at least every 5 minutes when they use the Skype client, of which Skype credit was being sold to the workforce rather than the market in 40% of our revenues. There was a real kind of disaster startup waiting to die. So we got hold of it, we did the things we do best, we listened to customers, we built an agile process where a customer could come on our website, business or consumer, and say, I really need this. We'd prioritize that, we'd business case it, and the community voted for the priorities of our business. It was a very solid pillar of our business. Secondly, in the telco space, having been at BT when I was offered this job, it was very important for me to figure out, is this disruption going to work or not? It was very clear that as we rolled through the years from 40 million to about 1 billion users over 2011 and 12, that actually what we'd provided was security in the brand, certainty for our customers that when they transacted it would arrive, and for business users that we were flexible enough to think about their business needs separately. And I'll come on to the relevance of that later. Today, you can look at a number of 300 million active users in any given month. You can look at a customer base of 1.2 billion. You can look at WhatsApp and Viber as second and third generation with the tripling effect of that. But at the core of the market is the disruption to buy enough minutes, give them to consumers free, offer them paid for products as a choice, and then leverage the scale that you've got globally. So it's a really powerful case study in what disruption can be. Today, having amalgamated Skype and Link as my jump-off point in 2014, Link is now rebranded as Skype for Business. It's one of the last things Lowry did before he left, and is leading business communication software on planet Earth, and will realize revenue of approximately $3 billion. So they've sacrificed roughly $1 billion of consumer revenues. They've made it core to what Microsoft does best, business solutions scalably, apart from the bugs and the 10-hour login, which we won't talk about. But fundamentally, they've leveraged an asset on the basis of their lens on the market, which was very different to ours, which was a consumer scalable play. The best thing we did at Skype, for what it's worth, was our humanitarian work. Another aspect of where I think Fund really does come alive and shine is when its charitable work is known. I think that's a really powerful play for us. We were deploying low bandwidth solutions in Haiti, Japan, other war-torn areas of the world, reuniting families, reuniting workers who were on the ground. And we got a lot of kudos from that. We were at the UN being thanked and praised. And it was an offset to this model of we're taking every telco CEO through hell, which is nice, and I enjoyed it. It culminated in 12 CEOs trying to threaten to close down Skype in, where were we, Chicago or somewhere? And we had a closed-door meeting. I said, look, it's very straightforward. If you close us down across your network, I'll tell 1 billion users you did that. They were like, okay, then let's talk. So we talked and talked and talked, and we got it done. So Microsoft have now got an asset that really has, over 1 billion endpoints in its stable of data, and it has the ability to leverage its business product on the back of the infrastructure. Right now, this sort of panel is alive because of digital and big data and all those trends that came out. The truth of it is, what it means to me is that 70% of the youth of our world is going to be more digital than it's ever been before. They will understand form factors. They will understand where to consume data and why. But the other thing still remains true for the fund market. They're going to have 1% of the consumable wealth for investment. So I largely take the view that if you can leverage technology and insight and you can always give your customer what they want, you'll win the race. If you play the game out like this, you run the risk that you marginalize your brand, you marginalize your offering, but don't be ignorant to the principle of this crowdsourcing thing, right? Do I think it'll happen? Probably not. Can I see my mum and 100 of her friends buying an ETF for platinum? Don't think so. But if they get together in large buying groups for £1 each, just think about the power of the online generation, right? If Facebook were offered an investment product at £1 a throw and it fed the hungry in Africa for the next 20 years, they'd probably take it on rather than give £3 a month to a charity. So lots of disruption capability out of this, but fundamentally, I think that there's just not enough solid evidence that there's a change. There's just a generational understanding of technology that keeps growing and getting more vibrant and so on. And if we really believe this piece about disruption, you know, Generation Z, born after 1995, on this, according to this, are looking for security and adaptability. Security and stability, sorry. So Theresa May, her whole campaign in the UK was safe and secure, safe and secure, safe and secure. And the youth ran away from her and voted Labour to the left, all of a sudden. Why? Because Jeremy's a nice, caring lefty who was going to give them their university fees. So it flies in the face of all the data and insight that you'll see. But the truth of it is, if you don't have that baseline of where the debate is, you can't consider your own business against it. That was 5 clicks this time. It's going up each time. This was a session that we chaired in Luxembourg, and this was the feedback that PwC were giving about your market. Your market, this is, you know, fund managers, fund owners. What's keeping you awake? And I think this is fairly accurate from the conversations I've heard over the last 48 hours. Economic and geopolitical uncertainty. Where are my corridors? How's my cross-border going to work? Where is legislation and regulation going to hit me, and when? Will that marginalise me for 6 months, for a year, 2 years? I don't know. Who do I partner with to get around it? What does Brexit mean? And I promised I wouldn't say the word Brexit, but what does Brexit actually do to your business? What's Donald Trump going to say in Q4 next year when the Treasury's told him he's bust? Is he going to want 10% more corporate tax? You don't know. Overregulation is clearly something I've walked into in this space that, you know, MiFID II, and Gary Janaway's at the back, ex-Schroders superstar. Anyone know Gary? Good answer, because he's bigger than me and he'll have you. Overregulation is something that Gary's really championed within Knipe and talks about how does MiFID II not just become a solution for regulation, but a step-off point for digital and a step-off point for a new experience for buyers, sellers, and market actors. Availability of key skills is, I think, a really big challenge. If you ask, can I develop a new product? And we heard the panel earlier saying, you know, my website is fairly bland, but every 2 years we make a point of changing it. In non-fund markets, that is a lifetime. At Skype, we iterated our website on an every 2-week basis. At Virgin Media, 15 years ago, we iterated it on a 3-monthly basis. So at Knipe, we're thinking about agile processes. Every 90 days, what does my customer want this quarter, this week, that I can provide that gives him an edge, gives her an edge, and gives us that consistency of certainty that customers are looking for. So think about the platform as a different console to the things you've seen in the past, and think about it being able to answer questions. So technology is an open question. Again, blockchain. Should we have blockchain now? Well, if you've got 15 million quid and you really want to research it well and deploy it, you'll need lots of other friends to agree that that's what you're doing, because it's a kind of an open source, closed loop thing. Don't do it on your own, because you might have an expensive printer. And we had a few of them in our history. So Luxembourg, basically similar, but really interested about this point on economic and geopolitical uncertainty. You know, Luxembourg's point of difference is that it's kind of a Eurozone but with benefits sort of model, and they're going to want to rein that in, and they're going to want to challenge that. So it's not unusual for me to see Luxembourg as having lived there for 6 years when I was at Skype, that really these trends matter more than most other markets because of that fulcrum. You know, will the EU change its DNA? What will happen post-Brexit from their perspective? Will regulation change? Will MiFID III closely follow, like the next Prime Minister in the UK? And these are key things. And the other thing about the market is when you're condensed into places like Luxembourg, your availability to key skills is really hard to achieve. So Bob's got his network of office infrastructure. You know, Lee's recruiting good people in London on the tech side now. We've got a lot of momentum now out of the belief that we can see a point of difference in the market that nobody else is taking up. So what does all that mean to you guys? First thing to say is I don't think this is one of the most ripe markets for disruption, so you can all calm down and go to sleep. Second part is, it takes one person in the room to get hold of the right startup with the right data enablement, with the right CRM within it, with the right wallet within it, and take the market somewhere different. It is incumbent on us not to let the big four, as I call them, think about playing in this space. Their core consulting model's under pressure. Why? Because digital in other markets is giving managing directors and CEOs really cool data to go and do their business stuff with. They don't need somebody coming in and going, what you want to do is you want to build that a bit higher. Well, my data says I don't need to, so thanks for that. So there's a real challenge, but what they're brilliant at, and I'll do this for Olivier's sake, because he is about to shoot me from the distance, what they do is they find agility. So they're all over startups, they're all over digital incubators. They're trying to find ways in which they can solution for customers, because they have to, consultants do. The key thematic for me is in a world, this is what I call a mind map. Did I get that right? Do I call it that, yeah? This is a mind map, and basically with every market I've ever been in, you start with this. You look at all the actors in the market. You look at the reality of where they've come from and to. You think about their top 5 needs. You think about their top 5 concerns. You think about their ability for stealth and disruption. Does Julian at his company have more ability to be disruptive than Bob at Bob? Does somebody else think that those two won't get there before me and they buy a startup? That's what's happening. So as friendly as everyone is, and everyone shares a nice coffee and a tart, I actually think there are people in this room who are planning for the next 5 and 10 years in the way that you have in the last 5 and 10 years, and you'll execute on it. But I don't think for 1 minute that you should be ignorant of the principle that if you don't find out for yourself, and you don't get the data, you don't get the reference ability from your customers, that things might go past you. So market trends, you know, the usual components, data collection is a key principle of this market. It can be done so much better, and is, by all the other brands that I mentioned. You know, you've got a BSkyB account or a Microsoft account, it's a full-time kind of junior admin role. But there are other brands where it's seamless and you don't see it, like Google and Facebook and so on. New technology, we talk about big data, we talk about digital. What is digital? Well, digital is a way of storing and reusing and having insight for things that you do once. It's just that, but it can mean many things to many organizations. What does it mean to you is the key question. Robotics, do they help? Do they hinder? I honestly don't believe there's ever going to be a place in the fund market for some sort of robot who takes $1 billion order from you and says, there's your share class, thank you for hooking in today to my website. I just can't see it. I think there are really intelligent salespeople and leaders in this market who will continue to thrive and lead the market. It's about contact, it's about people, and it's about the sincerity with which you can shake hands and mean it, and the contract backs it up. But what if you could automate the contract? What if you could have a digital mission where you know you need to speak to that customer 5 times this year because you understand his take-up cycle? What if you automated a sales guy's routine to include the new product as it comes live every quarter and offer it in a marketing campaign at the touch of a button for him to sample 50 customers at once? What if, what if, what if? So when you think about digital, I just urge you to think about what's in it for me, what's applicable to me, and how quickly do I deploy it or partner for it? Because lots of the admin and lots of the things in the first 2 boxes are all about making small investments to get major returns in the main. And what I see is that people are shy of it, right? And they're not looking for an edge, they're looking to be the same. It takes one to look for an edge and the whole market will disrupt. We talked about customer trends in the earlier one, but this form factor thing and mobility is key. You know, put your hand up in this room if you've got a mobile phone. Oh, you're just keeping your hands down because you've got a typewriter, right? Thanks very much. So you're a fund manager, you're on a train and somebody says, I've got a question, I think your prospectus is wrong and Bloomberg won't upload it, what are we going to do? And if you could go in real time to his administrator's app and say, I'll change that now, or I'll get my data manager on it now, and create that event, and then track that event as he's traveling, and he secures that massive outcome for his business, then he's digitally enabled, because his mobility is a core part of how products should surface. So it's about being always on. It's about business people all over the world finding value and being able to do their work where they want to. And that is a reality for all of us. And then the final one on delivery is, I think it's about end-to-end solutions for this market. I think there's lots of thin slices of, I'll hand the data to you, you hand it to the guy next door, I'll hand it back again. I'll charge you for that as well. Well, let's do a deal. Okay, well, I won't charge you for that. It's just an absolute legacy of, you know, small components. And I think that's worth analysis. It's worth conversations about partnerships. It's worth an ecosystem mentality to be applied. And then the reality around regulation is, you know, this is the only market where regulation drives the product agenda that I've seen in a long time. In many of the other markets, it was the customer walking away, or it was the financial collapse, or it was the growth of a competitor. In this market, I just feel like with the relevant data, regulation becomes a marketing campaign where you say, don't worry about it, we've got it covered, and we always will do, but we're trying to offer you an end-to-end solution that's always on for you. Just tell me what you want in it, and I'll go do it for you. So that's the opportunity as I see it. And really thinking about fund on the spectrum of, time, this is just something, this is my thoughts and my team's thoughts about how would you characterize the fund market. So I characterize it like this. If I go back to the 90s and look at some of the legacy, I'd say we achieved administration as a service for fund managers and fund administrators. By the 2010s, maybe up to today, in most cases, I think we see process as a service. Yeah, I'll do that, I'll give you a contract, I'll give you a price. If you buy 2, I'll give you a lower price. If you come to our golf event, I won't charge you. But does it scale? Does it make it global? Does it make us, as frankly a European base of powerhouse thinkers, play on a global scale? I don't think we do. I think the US is just a right market. I think lots of Southeast Asian models are really rearing up. Alibaba, all these guys, investment companies behind them. Amazon Fund have got $1.5 billion set aside for small to medium enterprises to invest in. Why do they want to do that? Because they want them to be Amazon partners of the future. So people are seeding the market in a different way, taking it from process as a service into what I believe is the destiny of the market. And I was asked to have a stab, so I did. And we call it certainty as a service. If you've got certainty that I'll take your data, whatever format it's in. I'll take your systems that are 20 years old and I'll put an API in front of it that works for you. I'll give you security of your data. I'll guard against cyber for the next 20 years. I'll make sure that when we look at the consumer work-life balance analysis, that we think about relevant data for fund managers and fund administrators. I'll think about efficiency to drive better cost. And I'll think about the ways in which my customers will be running their businesses in 5 and 10 years' time. I'll anticipate them and make a choice as a business case. But I do think what customers are crying out for on the planet in the future, against the geopolitical, the regulation environment, is certainty as a service. So just something to conjure with that's relevant to you, hopefully. And just to finish, I think disruption is really the wrong word. I think it's about transformation and being disciplined enough to disrupt yourself. And that's Bob's thematic of the last year, and Lee behind him. Bob's become chairman and thought about how do I incubate new products and services for digital, while Lee drives the flagship and says it's coming, it's coming, it's coming. Disrupting yourself is absolutely what I think the fund market should be thinking about, because you don't naturally disrupt each other, because you're all nice. So think about ways in which you can partner for glory and partner for testing and partner for sampling, and really get a fund manager in to say, what is the rest of your life about? Do you need communication solutions? Do you need payment wallet solutions? Would you trade gold for gold in a wallet that we could provide through blockchain-enabled services? Lots of these things are on the horizon. If we're not geared to take those opportunities, Amazon will play hard, Google will play hard, Microsoft will play hard. Lots of other brands and banks will continue to play power plays. We have to be nimble and agile to get through that market and win. So for me, it's about establishing your transformation potential, not mine, not somebody else's, your own individual company. It's about going digital because, frankly, there's no downside to not having data that tells you what the trend is, what the pattern is, and what the next available action for decision-making is. There is no downside. It's not that expensive either. We used a company called Tableau in northeast Seattle. Microsoft should actually buy them. We spend that much money with them. But in relative terms, you get an insight for the globe in 120 countries on every single transaction we bought a minute against in real time for less than 15 grand a year for a license, right? And there's no way, if you're a CEO of a telco, you shouldn't be buying that and competing against it, which they now all do. Innovate from the core in the right places. This is another key thing. I don't think I'm going to come into this market or anybody else and say, I've got the answer for you. I'm not going to do that, because I actually think the expertise is in this room. What I know about fund, you can write in 4 letters. Starts with F. But I really need you to understand that my non-emotional approach to your market, my independence of thought, and the things we've achieved in the past give us confidence that it might not be this level of disruption, it might be here, but you're here. And if you're here, someone's going to get there. And someone might challenge you to get there. And in the end, we need to find the right pattern for your business. So I think innovating from the core is about you standing up for your market. It's about you being thought leaders, and it's about you giving back something to the market that you clearly love and take part in very vibrantly, apart from my presentation. And customer and culture alignment, I think, is the other thing. What a great culture you've got in this market. I was really humbled by the level of, you know, honesty and integrity with which people operate. But do the customers who really do the buy-in from you understand what you actually do for them? Do they not care? Do they just walk around thinking, well, they're great guys, but I just think, you know, I don't really know what they do. We have to make them understand that they're buying and consuming world-class products and services with certainty. I think that's the key. And keep calm and always disrupt, it says on there. See that? The clicker might need a battery. It's all right, I like you. So, thanks for listening. I hope that was useful and a bit different. That's all I look to achieve in life. And if there's any questions or thoughts, I think there's a panel later on which I'll be sitting in. But really, thanks for coming along. Lovely to see you, and I'll see you next year as friends.